Yeah, here is again our channel, and this time let you surprised by General Introduction to Tax Law, Chapter 4, Part 2. We are going on with determining the income. So what's revenue minus expense, or what's profit? Previously, at the end of Chapter 4, Part 1, we were arrived at the definition of the revenue and some special cases for revenues. And now let's turn to what we can call income-related expense. So the amounts which you can deduct from the revenue in order to arrive at the total, the income. Good. The general rule for deductible expense or income-related expense, or however you want to translate this, is the expense which has been incurred in order to get, secure, or sustain the revenues. They are to be deducted from that type of income for which they have been incurred, and then examples follow. If you see that definition, please underline or keep in mind the words expense, so it must be something which makes you poorer. Then incurred in order to, so in order to means with the aim to. It's not necessary to arrive at the aim, so to be successful. There is also no word about the necessary deductible expense, so no, it's just the expense which you made with the intention to generate revenue, to get, secure, or defend against falling away the taxable revenues. That's the idea in mind, and that is what is decisive. Now let's look for the examples which the German law gives to clarify the situation and to underline that certain things are definitively also income-related expenses. For example, the interest for debts or rents which you paid for special reasons, as far as these interest amounts or the rents for special reasons are economically connected with one of the types of income. So if you had to grant them or had to pay the interest in order to make achieving revenue possible, at least having that intention. Taxes on real estate, for example, the city tax on real estate, which every owner of a building or a piece of land has regularly to pay, is naturally incurred or borne with the intention to generate revenue if you let a house to tenants, because you can't own that house without being willing, without accepting the fact that you have to pay regular real estate taxes. Similar public levies, if the things where or the occasions for which you pay them have to do with generating income, then they are incurred in order to generate income. Contributions to professional associations. As a worker, you might become the member of a trade union. There you pay membership fees. That is done exclusively because you have the intention to obtain professional advantages from the membership in the trade union. First, the trade union is going to negotiate better wages with the employers' associations. The trade union will give you legal support in case of legal disputes with your employer and will try to help you in defending your job against the dismissal, and so on and so on. And the expense which an employee has to take for the way between the private habitation and the usual place of work. Naturally, it is not possible to have a job without going there and going back. So the way to work is necessary to do the job, and so the money, the expense spent on the travel to work, on commuting, that money is incurred in order to keep and or get the job necessary. The remark that a standardization rule follows is just the hint that as this case is very, very frequent, and as an exact calculation of those travel costs would be highly complicated, at least highly complicated to check if everything has been declared correctly. For that reason, it is then stated that the travel cost for work has to be calculated in a standardized way according to standardized rules with standardized amounts of expenses which are acknowledged as deductible expense per kilometer. Then, if you live somewhere, that's definitively your private choice. But now, if you get a job outside the city where you live, then it might be necessary to rent a secondary flat somewhere near the job because you don't have the time to travel home every day. In that case, that second household might be incurred only in order to keep that job, and so that might be regarded as income-related expenses. There also certain standard rules follow in order to set a clear limit against second homes which are caused by private motives. If you need instruments or devices which you want to use for your work, that costs are also incurred by the wish to generate revenue, that is, to have your job, and that would also be deductible expense. And depreciations and amortizations if the underlying loss of value is also incurred in order to do that income generating activity, with a remark that low value assets can fully be depreciated in the first year. That is the sense behind that nice remark. Section or paragraph 6, section 2 is to be applied accordingly. Now, let's analyze this definition a bit more closely. Private consumer-related expense is not deductible under all the 7 types of income. We very often abbreviate this to the expression private expense. That does not mean that the focus is on a private person pays money or that person pays that expense from private funds. The only thing is it's expense which is caused by private consumer-related motives. So in that case, these things are generally not deductible. They are not income related, so they are private. As we heard already, there are certain amounts which are deductible, certain private expenses which are deductible as special personal allowances or special expenses or extraordinary expenses according to the subjective net principle that certain unavoidable private expenses must be acknowledged, because if the expense is absolutely unavoidable, that money has already gone away and you can't tax it away a second time, so you would have to acknowledge that this money must be spent. But the usual private consumer-related expense is, in principle, non-deductible. So things which you voluntarily can incur for private motives. Now, what you probably also, at least I hope so, missed when you looked at the definition in paragraph 9 is there is no statement on the success of the expense which was incurred in order to generate taxable revenue. So if you spend money with the intention to generate income but that fails, that is still income-related expense. The idea is the motive behind the expense is sufficient. Success is not needed. For example, a taxpayer goes to a job interview at a firm in a city far away, has to travel to and back, cost of €500, and now the job interview was a sheer catastrophe and the job is not obtained. Is that expense deductible? And the answer is a clear yes. Let's do a two-step test. First, was the motive for which the money was spent an income-related one? So, yeah, the answer was the guy or girl tried to obtain a job that would have generated taxable income. So that expense was related to a chance of obtaining, defending, improving taxable income. Yeah. Let's make the counter check. Was there any private consumer-related motive behind that expenses? Well, traveling far away to a faraway city, ringing the doorbell there, sitting down in a very unpleasant job interview, experiencing a complete catastrophe and then going home. That is probably not the best thing which I could ever describe as private consumer. So forget about that. That is no private consumer-related motive mingled with the business motives, so entirely caused by business, so deductible. That it was a failure plays no role. The legislator thinks that if somebody spends money for obtaining taxable revenue and only for that, then that this taxpayer can judge best if there is a reasonable chance, if there are good reasons to make that expense. I even once posed an exam question to people. A taxpayer just wants to practice job interviews, has no intention whatsoever to keep a certain job, but just files an application, gets a job interview, and just wants to train job interviews. So travels there for €300 or so. The whole job interview is a catastrophe or is rather nice. Don't know. Person comes home and doesn't take the job offered because that person just wanted to do two things: train job interviews, and second, perhaps get information about my market value at the moment. So there was no serious intention ever to keep that or to take that job. Is the cost for the job interview, pretended job interview without any seriosity, is that deductible? Now let's make again a two-step test. The first thing is there an income-related motive behind training job interviews and obtaining good information on one's monetary market value? Well, training job interviews, for what purpose do you need that? Well, evidently with the long-term intention that when you start a job interview once when you need it, that then it goes better. So is that done by somebody who has a good strategy to in the long run survive a crisis, or in the long run to improve the chances to find better jobs? And the answer is a clear yes. I only know very, very few people who regard a job interview at a firm which you probably never go to as an equivalent to a good cinema visit. So, no private consumer motive behind that. And second, to obtain good information about my market value. Well, for what is that information good? And naturally, if you next time quarrel with your employer about employer's views on what your salary should be and your ideas of which salary should be justified and adequate to the market, then it is an excellent idea to have some background information about your momentary market value, so what other employers would grant you for a similar job. Naturally, that's good as a background for your negotiations. If, for example, in other job interviews, you take 5 of them and then you find out nobody of them ever offers you more, but they all offer you far lower amounts of wages than your present employer does, then evidently it would be not a very wise strategy to risk the job by insisting on higher and higher salary rises, because then you might be, under the present market conditions, already heavily underpaid. So that would be a valuable information, which just means keep that job which you have under all circumstances. And so, yes, these 5 senseless job interviews would be an excellent strategy to sustain your present source of income. You have now the excellent first-hand information that you better don't risk that present job. Or on the other hand, if you find out you are paid €3,000 and others, all other potential employers offered you 4 and 4.5, then you know you are heavily underpaid. So then you will, in the long run, either start to look seriously for a job, for a different job, or you will have excellent negotiation arguments to deal with your boss. So naturally, yes, first step, is there an income-related motive, would be a clear yes, even in such strange situations. And the counter test, is there a private consumer motive involved? The counter test here clearly leads to a no. Nobody can imagine that job interviews is a kind of private leisure time occupation. Definitively no. If you know people who take job interviews as replacement for cinema visits, change your friends. Look for new ones. And you have rather strange acquaintances. So that is clear. So success or even seriosity of the expense is not necessary. What if somebody buys a book for €100, reads 2 pages in it, and then closes it? If that book is entirely full with information which is valuable for the job, and then you read it and then think, okay, that's not the right book, I don't understand a word or so, is it then nevertheless acquired for job-related motives? And the answer is yes. Before you knew it, you had the clear intention to read it in order to improve your knowledge and to be a better employee, and so in the long run to improve your chances to a salary rise or to improve your chances of not getting fired. Now, when you opened it, you found out, oh, that's the wrong book for me. But that was something you could only find out afterwards. Was there any private motive involved? Do you really like books on accounting? And the answer is, if the title is accounting, probably a clear no. Yeah. So success, not necessary. Might even be that you buy a book, €100, and the same book, exactly the same book, can also be bought as a pocket book for €20. Now, you will have reasons, if you are not completely mad, why you spend €100. For example, I am under pressure, I need that book now, or I can better work with such a nice book and not with a pocketbook. Or I just didn't know about the existence of the pocketbook. I just came across that bigger edition, saw it, spontaneous decision, I'm going to buy that. It's a book on tax accounting. Now, was it a business-related motive if you work as a tax advisor's assistant? And the answer is, believe me, yes. Was there a private consumer-related motive? Okay, when did you last read on a party to your friends some pages from a tax accounting book? Probably never. That has reasons. So no private motive beyond that acquisition. So that would be a clear yes again. So keep in mind, success of the expense is usually not required. The idea is, if a taxpayer only makes, sorry, you see I'm doing great failures. Okay. So if a taxpayer sees the need or is interested in making expenses which are exclusively motivated by the wish to generate or to improve the chances to generate or keep income, then the legislator thinks the taxpayer will know best. Probably the guy who works for the fiscal administration or the girl who does don't know better. It's taxpayer's own job, taxpayer's own situation. Taxpayer has the best experience and knowledge about his or her individual personal situation. And last not least, it's taxpayer's money and taxpayer's risk. So if taxpayer regards it as worse to spend that money, why should we hinder him or her? So, is necessity required? So can you waste money for income-related purposes? And the answer is, why not? There is no single word about necessity in the basic rule on deductible expense. So if you make higher expenses or unnecessary expenses, the only question is, was that done in order to improve your income situation? That's the only thing. Necessity is not necessary. The idea is you know best about what might have a good outcome. You must be given the chance to take a risk. The successful people are the ones who apply for 5 jobs and then can choose the best one, and not the ones who are mean when it comes to spending money on job applications, and therefore are forced to take the first but bad offer and then obtain a low income for the rest of their lives and therefore pay lower taxes for the rest of their lives. So the tax administration and the taxpayer himself or herself are often better if they spend a bit more, waste a bit money, if in the long run the outcome is better. You must take some risks, might even make unnecessary expenses and learn from that failure. In the long run, probably then you can earn more money because you made the necessary mistakes. And it might even turn out that spending money unnecessarily is a good business strategy. People don't like business partners who always only spend the absolutely necessary amount. The generous people are well liked, the ones with where you can make profit with, where it's a pleasure to have business with. So if you always fight for the last euro, you will probably not be appreciated so much as a business partner than those who spend a bit more from time to time, and also that might incur some generosity of the other side too, and that might save time and trouble and dispute, and so that might in the long run increase your income chances greatly. So necessity is not necessary. The only limit which is there is the private income motive, the private consume motive. Right? So is there any consume-related aspect involved? Here we have naturally the two clear extremes of entirely privately motivated expense, non-deductible, entirely business-related expense, deductible. But there might also be business expense and private expense motives mixed. Mixed expense would be private consume related and business income related purposes are followed together, come together in an expense. So what has to be done there? Well, now imagine you apply for a job in Munich, which you never really want to take. And you use the opportunity to stay 2 days in Munich at a hotel and enjoy visiting Munich. Now the question is, are the travel costs still deductible? First test, were they motivated by an income motive? There was some income motive. Okay, let's try a job interview at Munich. Probably I will not take that job, but in the long run it might have positive consequences for my job and income developments. But there was now also a private motive involved. I want to see Munich and enjoy that city. So when you have such a mixture, the reasonable reaction from a tax legislator is to ban the expense from deduction. If it's mixed, then the private motive interferes, and it might be that you spend the money mainly for private purposes, and to avoid and minimize that risk, the travel costs would be non-deductible. Full stop. Now, the idea is the generosity, that we don't ask for necessity, that we don't ask for success. That can only be afforded and risk if there is a strict ban on everything which might have a private consume motive, because that would be the things where you are in doubt if they are really income related. And so the legislator's strategy is mixed expense is always regarded as privately infected, so it's banned from deduction. It's not an income related expense. The only thing which you could deduct is if you can prove that a certain amount of the money which you paid, a certain amount of the expense which you incurred, is entirely and absolutely entirely caused only by income motives. Now, naturally, common sense is necessary. Imagine you have to go to a conference in Munich. That conference will begin on Thursday at 8 o'clock in the morning. So now you live in Hamburg. So you travel to Munich the day before, whole day by train. And naturally, you stay overnight in a hotel and sleep there. Now, naturally, you could argue you stayed overnight because you needed to be there the day before. But now a very conservative fiscal inspector could say, hey, but sleeping is not income related. You booked the hotel room only for being able to sleep there, and sleeping is private, is not business related. Now, naturally, that would be a bit far-fetched, because you could have also slept at home, and that you needed a room at Munich instead of staying home and sleeping there. That was entirely caused by your income related taking part in the conference of Munich the next day. Now, you could also say, but when you lay in that room, there was also a TV set, and you turned it on and you watched TV. Now, one could probably say, yeah, okay. But if you compare that aspect with the income-related aspects of the whole expense, that's rather unimportant, absolutely immaterial. That does not really count, because is it really believable that one of the major motives why you traveled to Munich and booked a hotel room there was the wish to watch TV in a hotel room? No. So probably the TV set in the room was just the usual standard of a hotel room. One wanted to give you a pleasant, convenient stay overnight. So the opportunity to watch TV for many people is a part of spending the evening. So that was why the hotel offered that to you. It probably did not really matter. So that was not one of the decisive motives behind the costs for your Munich travel, and no reasonable person would ever assume that. So that would not be mixed expense. So the question, the counter test is always if there is a private consumer-related aspect mixed in the expense, and naturally, if it is an aspect which really might matter. So absolutely immaterial aspects do not count. So reasonable people would never bring forward the idea how the travel was motivated mainly or to a major part by private motives. Good. You can find that rule that mixed expense is not deductible and cost of private consume can never be deducted from the tax base in section 12. This is again a general rule, so a basic rule. So naturally, if you can find something like the personal special allowances or the extraordinary expense rules, then that prevails as a special rule naturally. So there might be some things which can be explicitly declared as deductible, although they are more related to private life. For example, paying for your health insurance, paying for retirement pension plans, and such things are sometimes granted as deductible by special provisions. Now, what if the situation can't be cleared up properly? So it's not clear if there were private motives involved too. In that case, there is something which is called the burden of proof. If it's not clear how the situation was, then the general principle is everyone has to prove those facts which he or she brings forward in his own favor. So, for example, if you declare that you had revenue of 10,000 and the fiscal administration says, well, we believe you had revenue of 15,000, that is a statement which would be in favor of the fiscal administration, so they have to prove it. On the other hand, if you bring forward you had expense of 3,000, you have to prove you had expense of 3,000. And if you bring forward that was income-related expense, then you have to prove beyond reasonable doubt that the expense was motivated by income-related motives and that there was either no private consumer-related motive at all, or that it was absolutely not material, not important. So in many cases where, for example, there is even the chance that something is mixed expense, the taxpayer will not be able to prove that a private motive was not important, and that is then the exit death for the deductibility of that expense. Imagine, for example, in that context, the following situation. Taxpayer takes up a job in a bank as a clerk. Now, the new clerk shows up in jeans and pullover on the first day, and the job says, Smith, come to my office, close the door, and then tells him something about the dress code in our bank. Smith, if you ever dare to show up again in clothes like these, you will be immediately fired, so you will never arrive here again without wearing a suit. And now take 2 hours off and go to a shop and buy some decent suits and ties and then show up again. And if you buy a suit for only 100 euro where everybody sees it's only for 100 euro, that would be a shame for our bank. So if you dare to show up with such cheap stuff, then you will get fired. Good. Now Smith goes shopping and comes back with suits for 1200 euro plus VAT. So 1,428 euro was spent by Smith. First, was there an income-related motive? Yes, definitively, because otherwise Smith would have got fired. And ladies and gentlemen, that's an excellent motive. Now the counter test. Is there also a private consumer-related aspect or advantage combined with buying a suit or several suits? And the answer is yes. Everybody needs a suit for certain formal occasions, and you also need probably several ones so that you are not always seen in the same suit. So that is a kind of expense which is always also necessary for private purposes. So that is now a mixed expense potentially. Can Mr. Smith now prove that there is no private advantage which is materially involved in his spending that money? Let's think about that. Now, our first naive idea would be Mr. Smith affirms under oath that he has been forced by his boss to buy suits. That would not really help because Mr. Smith could, even under oath, probably lie. Now he brings a written statement from his boss. Would that be accepted? And the answer is no. It only proves that there was a business-related motive, but it does not exclude the private consumer-related advantage. Mr. Smith could also in future wear some nice suits outside the job when going to a marriage, to a funeral, or to whatever. So that cannot be ruled out. And by the way, it would even be intelligent for the fiscal administration not to accept such a written statement by the boss. Why? Because otherwise I would always tell my boss, huh? Is it really tolerable that a professor at a university teaches the stuff without ever having seen the work? So could you please force me, dearest superiors, to book some travels to Australia, to China, to the USA, and a cruise on the Mediterranean Sea for a big amount of money, so that, and threaten me by firing me, or with firing me if I don't enlarge my experience of the world. Probably if my boss likes me, I get that as a written statement. So I would have the best holidays of my life, officially under pressure from my job superiors. If you do not improve your knowledge of the world and assemble some experience worldwide, then you will get fired. That is evidently the natural reaction which people would show, and so can't be accepted. The same here with the suits. Well, your own personal problem if you have to buy a suit there if you can also use it for private occasions, that can never be proven by you that the consume aspect is not material. By the way, did you ever observe that in some jobs people wear shirts or so where the name of the firm is somewhere to be seen? That's a natural reaction to that jurisdiction. The idea is, if we give shirts to our people working in our firm, for example, as staff in a shop, if they have a kind of a uniform so that they can immediately and easily be recognized by the customers, then we do it in a way that these clothes cannot be worn by them during their private time. So we can prove that it's under normal circumstances absolutely excluded that they wear these suits or clothing for private occasions, and so we can prove there is only the income related motive. They only can wear that during their office hours. Indeed, that makes it plausible enough. Again, another example, taxpayer buys a new computer which is entirely used for the job. That is not really realistic, but I tell you so. We could prove that. So now the employee pays for the computer himself or herself, but that would not have been necessary. Can the depreciation for the computer nevertheless be deducted as income-related expense? And the answer is, well, you see, the trap here is I'm leading you up the garden path by talking about necessity, but you know, necessity is not necessary with an expense. The only thing is, was the motive job-related? And if I buy a computer which is only used for the job, then this is job-related, naturally. So, deductible expense. Sometimes you need some simplifications because the situation is hard to judge, or it's difficult to calculate the exact amounts of what you needed or what you spent for income-related purposes. So very often cases which happen very often, which are highly complicated or so, there you create special rules that the expense is limited to a certain amount, or that the expense has to be calculated according to a standardized formula, and so on. Very often you find that for the rules for the travel costs for commuting between your home and your regular working place. Sometimes you find it with regard to other travel costs. In Germany you have it with the costs of a double household. For example, if my family and me live in Munich, but I take up a job where I have to spend 3 days a week at Hamburg, then I have to find a flat or so in Hamburg to stay there overnight during the 3 days when I work there. That's caused by the job. Then I have also a bed there and a TV set there. Well, that does not turn the second flat into a private consume-related affair, because the major and overwhelmingly nearly exclusive motive for the whole expenses is nevertheless still the wish that I need to, necessity that I need to be at Hamburg 3 days, and so I need a place where I can stay overnight and spend the evening. Now naturally one might use that for nice ideas. For example, I live in Munich with my family, but I always wanted to have a second home at Hamburg. So I apply for a McDonald's job at Hamburg, or for a job at Hamburg, and then I buy or rent a villa at Hamburg. 1,000 square meters, €15,000 rent in a month, and so on. And now we would again make the test. Is it caused by the job? Yes, certainly. I need to stay overnight for 3 days. Is there any private consumer related motive imaginable behind the whole affair? Well, why do you rent a villa? And why do you spend 15,000? Isn't that bit? Isn't that the idea? Evidently, if I need to stay at Hamburg, then I want to indulge a bit in extraordinary luxury and enjoy my life. I want to be the big guy living in a villa once in my life. Now I can deduct it from the tax base. And the answer is no, you will not be able to, because here one sees a clear influence of private motives. That's naturally private consumer. By the way, very often you have professions where people have to represent and to live on a certain social standard, on a higher standard of living, making parties for renowned guests and so on, all that. And there the question is then, is such an expense then income related? The answer is probably yes. But is it also free of consume or private motives? And the answer is no. The thing is, if you feel the need that you need to invite friends for parties, business friends for parties, that is always also something which comes very near to private consume. The line cannot be clearly drawn, and so that shows it's mixed expense. That would all be non-deductible. So that is sometimes, by the way, the reason why people in such jobs get high salaries, because they need to make the expenses which are expected from them next salary. Yeah, okay. Now everybody has probably income related expenses, so from time to time, just to make checking the tax returns more easy, the law makes standard estimates or minimum amounts which you can deduct from the tax base. That is, for example, a worker's expense lump sum, which you can deduct from your revenue as a minimum amount per year. At the moment in Germany, 1,000. If you can prove you had more, then you can prove it. And then the fiscal inspector needs to begin to check your proofs, your invoices, your bills and documents, proving the deductibility. If not, the case is plain and simple for the tax inspector, because then he just say, oh, that person brings forward to have had €900. Okay, I'm ordered by the law to believe in at least €1,000 deductible expense, so it's a 1,000, and so next tax return can be worked on, so that saves work. An example for standardized cost evaluations or estimates is, for example, travel costs between home and first regular working place. There you can only deduct 30 cents per kilometer of the distance between home and working place for every day when the taxpayer goes to his working place. The idea is otherwise people would start to calculate the exact costs of their cars, the gasoline costs. There would be endless disputes about the kilometers driven during the year. There would be many opportunities to cheat and so on. As that 30 cents per kilometer can lead to grave consequences if, for example, you commute between Hamburg and New York there is a maximum for that standardization. The maximum amount which can be computed under that rule is €4,500. Higher amounts can only be deducted if you use your own car. And the 30 cents per kilometer is not applicable to flight travel, which can easily be understood because you can book a flight, let's say, for €90 or so to Spain. And now if you think about the kilometers driven there, you would probably end up with 1,000 kilometers for one trip, and that's naturally it doesn't fit. Good. Other travel costs, there are also sometimes limits. I just refer you here to the text of the German law, or the example which I had with the second home which you need in Hamburg. If you live in Munich but have to stay for a job purposes 3 days per week in Hamburg, then you saw that problem that a small, decent, cheap flat is probably acceptable as caused by the job, but when you take the opportunity to rent a villa and live in a 1,000 square meters apartment with the standard of highest luxury, then this will probably be mostly motivated, or at least in a not neglectable way, motivated also by your private consume inclinations. And so there is in 9.1 number 5 from 2014 onwards a standardized rule how the necessary extra costs for a second household can be calculated. The idea is, as there always a certain aspect of private consume and a certain aspect of business related things are mixed, the law says we just make a standardized assumption how much is the maximum which can be caused by income motives. Same things for necessary cost for overnight stays. There are also some simplifications, and here the utmost simplification to make the work on the taxpayer's tax declaration a bit more simple. If you have employees and somebody has income from employment, up to €1,000 a year are believed without any proof as the minimum amount of deductible expenses if you have a current job. €102 are believed as a minimum amount of deductible expenses if you have retirement income. And for certain kinds of other income under section 22, a total of €102 is also deductible as a minimum amount. Okay, let's make a short break here.